Good morning and welcome everyone to the Money Control live stream. You're watching Markets with Santo and CJ. And well, if I'm, Tata Steel, after yesterday's earnings, I'm asking all the bears to come out of the bar and settle the score, Santo. I mean, what a brilliant set of numbers from the company. Nobody was expecting it to happen, but they have flexed their muscles and basically proved the skeptics sorely wrong. If you look at the overall numbers, the strength in the US, European business, as well as surprisingly better realizations at home, I think have driven a beat across metrics. If you look at the PAT, revenues, as well as EBITDA, there was beat across the board. And clearly, I mean, if you look at the India EBITDA, Santo, 21,326 for the June quarter, despite the fact that the June month did see the impact of the export duty. The entire impact of the export duty was felt in the June month. European business doing even better. I mean, the EBITDA there was around $360 per ton, which was also above a lot of what the market was expecting. So clearly, I think operationally, they have managed the situation quite well. And the thing now is that analysts probably are looking at this and they're expecting maybe, okay, we'll see the entire impact of Q2. And maybe beyond Q2, H2 could start looking very good. The second half of FY23, JSW Steel yesterday also mentioned, we talked about the fact that they are also expecting a recovery in margins and volumes in FY20 second half. And probably Tata Steel could do the same. And I think if you look at what JP Morgan had to say, they have retained their positive call on the stock, and they believe that the company could surprise the street on the upside when it comes to earnings.
Well, CJ, with Tata Steel in particular, we saw the stock peaking out in July last year. Since then, it's never gone back to those highs, despite numerous attempts. And in April, it did come close to it. So, at this point, I would look at Tata Steel more as a tactical bet. Probably you could still see that brief spurt in the stock as the market reacts to the numbers. Definitely a very strong set of numbers. Nobody was expecting Tata Steel to report such strong numbers. In fact, if you check all the pre-earnings season commentary, the biggest disappointment was expected in steel stocks. In fact, many of them have disappointed, but Tata Steel clearly seems to be an outlier here. But that said, CJ, we still have to see the full impact of the export duty. To some extent, it would have been there. The announcement came sometime, in the second week of June. So, second quarter is when you will see the full impact of that coming in. Also remember, CJ, now we're talking about a global slowdown, and this is, in fact, some people have started, experts have started, I just saw a piece, saying whether, China could get into the same stagflation kind of or stagnation as Japan has been for the last many years. Germany is on the brink of a recession. You're seeing factory output in UK being the slowest in many months. In US, again, there is talk about the recession. All these don't bode very well for the steel sector in general. If there is a global slowdown, clearly steel will get impacted. And remember, the strong numbers have come from the European side of Tata Steel's business. So if there is a slowdown in Europe and US, very clearly, I think it will start having its impact. So to me, it's a tactical bet at this point in time.
Well, Santa, I think yes, probably it could be possible that in the short term we could see a good spurt, and I think probably a lot of traders will play for that. But even if you look at it from a fundamental side, the weakness in the Q2 volumes as well as margins, I think is mostly priced in. If you look at the sort of underperformance that we have seen from the stock, probably now I think markets focus will now shift towards the fact that there is a possibility that there could be withdrawal of the export duty, because we have already seen steel prices at home correct almost 15 to 20%. So, incrementally, there will be less and less reason for the government to continue with those duties on exports. And I think focus will also shift on what happens in China. You're talking about stagflation, but at the same time, there is now a widespread reporting. There are a lot of stimulus is going to come back in China as they look to recover the economy from the, the ravages of the COVID pandemic. Clearly, I think if demand there rises, especially led by the construction sector, then export, steel exporters like Tata Steel will definitely benefit not only from their India business, but also from Europe, because that is also another center or hub from where they export steel to China. So clearly, I think at this point of time, given the underperformance of the sector, given the underperformance of the stock for the past 3 months, I think the risk reward just seems too good at this point of time to be ignoring it altogether.
Well, on the risk reward part, I do take your point, but I think it could still be a tactical bet more than a longer term play there.
Well, I mean, of course,
with commodity, it is
market
always
will be the greatest judge of that. But that said, let's quickly take a check of how the setup is for the market this morning. And it seems like a weak, morning on the offer, just like yesterday. If you look at the Nifty futures or SGX, they're indicating a moderately negative start to the Indian market. Wall Street yesterday ended on a mixed note. You had the Nasdaq falling, whereas the S&P and Dow Jones just crawled into the green territory. So clearly a mixed bag of cues from global markets. Walmart, one of the biggest retailers in the world, cut down its profit estimate or profit guidance for 2022, clearly suggesting that inflation is now taking its toll on consumption. So a lot of mixed cues. Santo, yesterday again FIs were net sellers, DIA themselves were net sellers. So I've been probably, given the fact that we are heading into expiry, could be that the market might stay cautious for this week.
Well, on the part of FIs selling, there are two ways to look at it. One is that they've resumed selling, but if you see for the last many days now, the selling has been sub 1,000 crore. So this could either indicate that probably the market doesn't have enough depth to absorb that kind of selling, or probably the, FIs they have started taking a slightly more positive view. At least there are enough number of buyers as well, as opposed to say a month back when there were far too many sellers, at least judging from the way volumes have been going. That said, it looks a little doubtful that before the major decision by the US Federal Reserve, that traders would want to take up huge positions, so they would rather wait it out. Maybe that's why you can see the trend being a little lackluster for the next couple of days. I wouldn't be too worried about that.
That is quite
market
possible.
Depth is more the point.
That is quite possible. I mean, that said, let's look at the other stocks that are on our radar, Santo, this morning.
Well, starting with Axis Bank, decent set of numbers there. Both bottom line as well as net interest income came ahead of what analysts were expecting. Net interest margin at 3.6%, that's the highest in 20 quarters. There's been significant improvement in the asset quality as well. If you see both gross NPA levels as well as net NPA level, they are the highest in almost 24 quarters. That's quite something. The main shortfall in the numbers, as most analysts have pointed out, is that the business momentum has been a bit slack, but there I think maybe the bank is trying to go a little cautious, focus on improving the asset quality, and I think the market is taking note of that.
But Santo, improvement in asset quality is no longer a surprise. I mean, it is almost like it's yesterday's story now for the banking industry, especially at least for the top 5 or 6 banks out there. I think what really puzzled me most is the sequential degrowth we are seeing in the lending book of the bank, where everybody else is growing their advances at least 3 to 4% on a quarter-on-quarter basis. You talk about HDFC Bank, you talk about ICICI Bank, and even the mid and small cap banks. I think Axis Bank's degrowth or 1% sequential fall in loan growth clearly is something that market will not take very kindly. Apart from that, if you look at the guidance as well, they've only indicated that they expect to outperform the industry loan growth number. I don't think that is also going to sit down well at a time when your rivals are growing at 18, 20, 21 and 29%. You talk about HDFC Bank, ICICI Bank and Kotak Mahindra Bank. Axis Bank growing probably at what, 13, 14, which would be probably the industry credit offtake for this year. I don't think inspires a lot of confidence. So clearly for me, I think this is one stock that probably could see might lag behind when it comes to those premium multiples that probably peers like ICICI Bank and even SBI might enjoy going ahead. And if you look at what JP Morgan also had to say, JP Morgan has retained their neutral rating. They are among the only brokerages out there who have a neutral rating on the stock, and they believe that the return on asset of the lender is clearly lagging behind its peer, and therefore growth good multiples or premium multiples might be hard to come by. Well, that's essential. One stock on my radar is Sonata Software, another mid-cap IT name showing resilience in earnings in this quarter. People had written off the IT sector, especially the mid-cap IT names, but clearly one after another mid-cap IT stocks are showing that there is more to them than what the market is looking at. I mean, look at Sonata's growth numbers, 21.5% sequential jump in sales, 35% growth in operating profit, and the most impressive bit, about 50 basis sequential expansion in EBIT margin, Santo, in this quarter. I think these numbers should definitely be impressing investors. And the fact that stock, even if you look at it from a technical point of view, not only in the short term, but in the long term, clearly technical indicators are also suggesting that bullish momentum could continue. So this will be one stock that definitely will be on my radar.
Well, CJ, before I counter your argument, there is something I like about Sonata Software. It's almost like a textbook study of what long-term faith in a stock, if it goes right, can kind of give you, and the kind of patience that it calls. The stock peaked out somewhere around in Jan of 2007. It peaked out around 70 rupees at that time, and for the next 7 years, the stock did just about nothing. Okay. In May of 2014, the stock was still around 70 rupees.
Yeah.
And from there till now, the stock has now risen almost tenfold in less than 8 years. That's nothing short of a spectacular performance. Well, that apart, CJ, I think the major worry at this point in time, as far as investors goes, mostly on the margins of IT companies. That's where they've been raising the red flags, not so much on top line and bottom line growth. If you look at Sonata Software here, the margins have been steadily shrinking over the years. From a peak of about 13% in September 2019, it's now come down to about 8%, which means that progressively it will have to keep doing bigger volumes to be able to maintain that bottom line growth, and that is where there is a slight bit of concern again.
I think Santo, that could also probably be naturally a part of the fact that the company is trying to expand its footprint out there, and probably the growth is coming maybe a little bit at the cost of profitability. But I think now that a little a semblance of scale has been achieved in the business over the past 3 to 4 years, I think probably now the focus will probably shift towards profitability along with growth, and I think that is also reflecting in the fact that we are in a difficult quarter like June quarter, this one, we have seen a sequential expansion in margin. That's it, Santo. Next stock, something that a lot of our viewers have been waiting for your opinion on.
Well, Tech Mahindra, again the same thing, big correction in the stock since over the last, stock down about 43% from its peak. Now, the margin miss.
One of the worst hit big five stocks, I think.
Yes, worst hit big five stocks. And here the concern most analysts have about the stock has largely been on the margin miss, and that's been the case with almost all tech companies during this quarter. Margin is what they've been worried about. Now, the only thing going for the company at this point seems to be reasonable valuation. But when you look at the other way around, there's also a reason why the market is not giving Tech Mahindra the kind of valuation that it is giving to the other companies. Now, 11% margin for this EBIT for this quarter, and the company has said that it is confident of maintaining 14% margin going forward. At this point, if you see most of the analyst commentary, they are not very convinced that the company will be able to deliver on that. The company has managed to meet most other parameters, but margin, I don't think analysts are really confident about that, and I think the stock probably could underperform for some time.
Santo, I think the underperformance on the margin front is probably not a surprise, and I don't think investors out there would be surprised by the fact that there has been a sequential decline or shrinking of margins, because the challenges that Tech Mahindra is facing, everybody else is also facing in the industry. So I don't think it will be fair to single out Tech Mahindra because its margins are contracting when you have bigger peers like Infosys and TCS also suffering through the same thing. But I think what will give a lot of investors confidence is the fact that the growth momentum has not slowed for the company. Just like Infosys earlier, Infosys also showed that their growth momentum is actually quite strong even despite the cautious commentary from TCS. Tech Mahindra is also showing the same thing. If you look at the deal wins, about $802 million of deal wins, overall deal wins in the first quarter. And I think that sets up the company quite well to deliver on the FY23, growth targets. Apart from that, valuation, of course, I think that is where the play would be for me, because at this point of time, the stock is being, trading at quite a hefty discount to a lot of the bigger peers, because the correction in the stock has also been much larger than, say, for example, your TCS and Infosys of the world. I think therefore, there could be a contra play here if the management is right and they can recover the margins in the second half of FY23, and then you have the growth momentum on top of that, then you could possibly see a good contra play happening here.
Well, last stock for the day, Macrotech
Developers. My last stock, Santo, is from the real estate space, Macrotech Developers. Well, we were expecting a great set of numbers given the June Q1 update. But if you look at the numbers, clearly threefold jump in pre-sales, 50%, more than 50% rise in collections. So clearly the company is looking quite good. Before I come back to Macrotech developers, let's just quickly take a quick check at the market, and it's a very flat start, Santo. Very, very flat start.
Still, the breadth is pretty good. 1,000 stocks, 1,100 stocks up versus 563 stocks down. Nifty Bank is up about 0.2%.
Yeah, I think it's the small cap space and the mid cap space that are currently helping out the breadth of the market. Clearly, the mid cap space is in the green, and even the small cap space is inching towards it. So clearly, the broader market is where you're seeing a little bit more action than the large caps.
Tata Steel up in early trade,
yes,
CJ,
yes.
if that makes you happy.
Thank you. I think DV's lab as well. I think it's just turned into red. UPL is among the top gainers in the Nifty, doing well, higher by about 0.45%. But if you look at the losers, Santo is Axis Bank down about 1.2%, Infosys down about 1%, and Tata Motors down about 0.9%. So yeah, coming back to Macrotech, one thing that really stood out to me, Santo, from the investor presentation is the fact that the company has indicated that they are now in a position to actually gain more market share, and I think that really boosts your confidence when a company which is already probably the leading real estate company in the country, they are indicating that they could push up the market share to almost 15% in MMR, that is the Mumbai metropolitan region, as well as Pune. So I think these sort of commentary and performance coming out, and the fact that the stock has actually underperformed this year, that Macrotech is actually down 6%. Tells me that maybe there is more to here than what is meeting the eye.
Yes, sure, CJ. The underperformance has been a bit surprising because the company has been giving regular updates, and from the updates, it's quite clear that the company has managed to do quite well.
And it has also been reducing debt, actually. I mean, that has been one of the biggest trigger for the rally last year.
Yeah, that it brought down debt significantly, almost halved it between March of 2019 and now. There's a sharp reduction in debt there. Yet, the market seems to be very slow in warming up to this company. If you compare it with the realty index, which is down close to about 25%, then probably Macrotech's underperformance doesn't look, all that. In absolute term, the performance doesn't look all that bad. But probably at this point in time, there are concerns about what rising rates could do to overall realty demand, and I think that is where the pressure on the stock is coming
Santo,
from.
I think probably, that has been one argument that has been thrown at the real estate space, and clearly was part of the, the correction that we have seen since that emergency rate hike back in the first week of May. But I think the view within the industry is that another 50 to 75 basis points of rate hike should not be detrimental to housing demand, right? If you look at the housing portfolios, a lot of the lenders that have reported earnings, they have all seen quite a robust growth in the home loans department. That is one of the leading, segments within the advances for a lot of lenders. So clearly, demand is there, and I just don't think that we should be too, worried about demand so soon.
Well, let's see. Market will tell.
Well, Santo, I think actually a lot of people out there want your opinion on Chambal fertilizers, because I know that you have been, quite positive about the agrochem space. Although Sharda Cropcam's earnings were not that great, but what do you think? I mean, how is the the overall sector looking for you?
See, the broad argument for most fertilizer companies has been that rising food prices, better crop income, which means that farmers will be able to spend on more on fertilizers. Besides that, the government subsidy has also been there. That's lifted sentiment for the sector across the board, almost all stock. Chambal, I've not taken a look at the stock offhand, but it's something where the stock has not really performed. There was a brief spurt, and after that again it's been under some kind of a pressure, whereas you've seen some of the other stocks do well. So I don't have a specific view on Chambal fertilizer, but if you look at the sector as a whole, probably this is, I think, a sector that could continue to outperform the broader market in the short term.
Well, we will of course have to be thankful for the fact that monsoons have picked up. So clearly a lot of fertilizer companies will be quite happy with the fact that monsoons are now running in surplus, because earlier in the season we were actually worried with the deficit rainfalls, and that could have a detrimental impact on fertilizer demand. But clearly things are looking up for that sector. So Sandeep, I hope that we have answered your question. And with that, let's wrap up the show, Santo.
Well, with that, it's a wrap, and do share your feedback in the comment section below.
And please keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading session.